Brad Hamblen with Cardinal Financial. I've been working in the mortgage industry for it looks like 18 years now. And one of the things that I like to do is I like being outside. So in my video that I put together, I'm gonna be outside surfing today. So this is what I did over the weekend. One of the biggest things that I get asked a lot, and when I'm doing a pre-approval, one of the things that's very important to me is to talk about what people are comfortable paying per month versus what they get pre-approved for, because those are two distinctly different numbers. So a pre-approval is based off of your gross income and what debts you have on your credit report, which are just installment loans, credit cards, and any other type of debt that's on their credit report. Now, it doesn't take in consideration that one, you don't get your actual gross income, you only get your net income. That's after taxes and all the deductions for insurance and all that. So that's what you actually have as money to work with, is that amount. And then you actually have, I think, other bills besides what you pay on your credit report, like you have car insurance, most of the time you have cell phone, you have utilities, you have food, and other items that you pay for that are just not calculated in that amount. So if I use your gross income to calculate what you're pre-approved for and only look at certain debts, it leaves this big gaping hole where we're not looking at the full picture of what you actually can afford. So the numbers are completely different. So when you do a pre-approval, you want to look at, okay, what can I afford per month and what fits in my budget? Now, one of the experts out there, his name is Ramit Sethi. He says that you should use 50 to 60% of your net income to cover your fixed cost. Then you use another 10% for investments, 5 to 10% for savings, and then you have 20 to 35% for guilt-free spending. This is what you actually like and want to do. And it's a way to kind of put like a bucket system in place instead of trying to knock down and think about everything as a conscious spending like habit. So you can kind of do things automated. And he has a great book called I'll Teach You to Be Rich. I say that again, I Will Teach You to Be Rich. And if you go listen to his book, it's got great insights to help you with creating a budget. Now, the last thing that I'll tell you is that even with pre-approvals and you put together a budget and you think about things, make sure that before you get into a situation that you're not ready for, that you actually are comfortable with what the payment is, because that's very important. Now, the pre-approval amount, if you have other people that are not on the loan and those things are taken consideration, then yes, the pre-approval amount may be appropriate for you to look at. But if you're talking about, hey, should I spend what I was given as a pre-approval, you should look at it and make sure you're comfortable with the monthly payment before you spend that amount. So if you have questions about getting pre-approved and how that process works and what the next steps would be, email me below and I can answer you any questions that you have. Thanks again for watching my video. If you liked the content, subscribe below and like my video. Have a great day.